Hi, I'm Craig and I'm with Paolo, and this is our presentation for the Metcash report. Okay, so this is the executive summary. The report analyses Metcash, the third company in the Australian grocery industry, and its current position in the market. It critically analyses the competition of Woolworths and Wesfarmers, the two main players in the grocery market, and compares its financials to Metcash directly, so the industry analysis and internal analysis can be identified. The report concludes with Metcash's current issues it must face, along with competitive strategies that the company can implement to remain competitive in a tough market. Okay, so I'm just going to do a quick competitor analysis for Wesfarmers. Wesfarmers produced solid gains in 2013 across all of its value chains, with an operating revenue up 3% to 59.8 million. This was through multiple value chains such as Kmart, which recorded a strong earnings growth of 28.4%, Wesfarmers Insurance, which recorded record earnings of 205 million. Bunnings Warehouse, another value chain, had strong sales growth up 7.5%. Officeworks recorded a 9.4% sales growth to 93 million. And lastly, Coles, Wesfarmers' top brand, achieved a fantastic financial year with an increase of 13.1% to 1,533 million. This was achieved by Coles pushing hard against competition by pushing for lower prices and stronger operating efficiencies so supply chains could go further. Woolworths, the second company in the competitor analysis, had a huge successful year in 2013 as group net profit after tax soared to 2.26 billion, up 24.4%. This was due to multiple factors as the value chains of Woolworths expanded greatly. 34 new supermarkets, 16 Masters hardware stores, 16 Dan Murphy's and 14 new BWS stores contributed to this great financial year. Australian Food and Liquor and Petrol produced gains of 4.7% over 52 weeks to $40 billion. Australian supermarkets were up significantly, with Woolworths having 0.7 million more customers per week and producing an increase of 4.2% in sales growth, along with an 8.9% growth in Woolworths Liquor to $7.2 billion. Petrol, which is another part of value chain through Woolworths, combined with Caltex, produced a solid gain of 1.2% from the previous year, while Big W and Masters expanded hugely, with Masters producing a record increase of 262% to 539 million. This was supported by the expansion of Masters, with 16 new stores being built by Woolworths. I will now pass it on to Paolo.
Yeah, I'm now going to talk about the internal analysis, going through the core competencies, the SWOT analysis, and the BCG matrix. First, the core competencies of Metcash are Metcash Food and Grocery, the Australian liquor marketers, and Mitre 10 and Automotive Brand Group. So the biggest strength of Woolworths is the fact that it can rely on 4 independent businesses that I just listed to sustain its economic activity. Moreover, the 3 channels of AGA branded independent store enable Metcash Food and Grocery to suit niche markets, and its own private label offering 3 distinctive brands is also a distinctive advantage amongst competitors. Plus, ALM is also a strength for Metcash because with 15 distribution centers and 4 national independent retail brands, it can operate everywhere across Australia. However, the main strength of Metcash is also its biggest weakness because rely on different businesses can lead to a loss of activities control. Diversification is indeed a proof of low performance in different business units and leads the firm to take higher risk. Furthermore, Metcash does not have the same control over its suppliers like Woolworths or Coles, as its stores are managed by independent operators. But Metcash still has opportunities to improve its economic activity. Morningstar has indeed a moat rating on Metcash, which means that it is positioned to maintain its competitive advantage in the grocery sector, and the purchase of the Franklin supermarket business in 2011 strengthened its position in the domestic oligopoly. Moreover, Metcash operates its business differently over its competitors. Its IGA stores are indeed located in areas where the economy of scale are not sufficient for the big retailers, and so enable Metcash to have a lower competition. Finally, the ACCC position against Coles and Woolworths to ensure these two groups do not dominate regional and metropolitan areas gives opportunity to Metcash Food and Grocery. Finally, Metcash is under pressure in what is an increasingly competitive retail environment, and it continues to be squeezed by the big retailer Coles and Woolworths, which remain locked in a price war. According to the BCG matrix theory, Metcash Food and Grocery is the cash cow of Metcash. This strategy business unit generates indeed a large amount of cash thanks to its strong position on the market, representing 70% of total sales. However, the sales figures of MFAG fell by 2.3%, which means that if this segment does not retrieve a sustainable growth, it could become the dog by having a low market share. The star category of Metcash is designed by the ALM segment because it indeed has the highest growth of the Metcash businesses. The rate of this business is really important by showing a sharp sales growth by 24.9%, but it must be said that this growth is also explained by a high expansion wanted from Metcash. Hence, it is crucial for Metcash to maintain this strong position by lowering the cost in order it becomes a new cash cow of Metcash. Finally, hardware and automotive chains, by showing an interesting 12.6% growth, can be considered as the question mark of Metcash because its low position on the market does not enable this business yet to be qualified in star category, but it could if it keeps growing, earning more market share. It is not through pastel analysis that I'm going to talk about the industry analysis. So the Australian government acts a lot in the industry and believes a market-based approach. That is why in the past few years the government implemented key ongoing policy reforms such as the Clean Energy Future Plan or the Carbon Farming Initiative in order to regulate the food economy, but also to adapt the industry to climate change and growth. The government is also working on new partnerships with other governments to develop better regulation, even though it gives priority to ongoing investment in public infrastructure. The economic factors are crucial to understand how is currently working the economy of the sector. Thus, it must be said that economic factors are favorable to Australia because its economic situation is sustainable, which explains that Australia has a successful and growing food industry. As you can see with the figures, the food grocery industry is really growing in Australia. Concerning the social characteristic, it must be said that people will always need to eat, and so the food industry will always have a prosperous future, even more with the high Asian economic and population growth, despite structural change will be needed. Technological improvements are significant in this sector, and Australia took this element in consideration by investing around $90.8 billion in 2010-2011 to help businesses identify new and higher value market opportunities, and so to find smarter ways to do business with products, people, and processes. In grocery industry, environmental change must be highly considered because global warming is an issue that food industry cannot escape, and climate change and growth are, for instance, factors that weaken the industry. Finally, the legal environment knew a major change in 2011 because for the first time, a single national consumer law, the Australian Consumer Law, was created that involved reforms concerning energy, telecommunication, food labeling, and consumer credit. I'm now going...
Okay, So I will be now discussing the major strategies Metcash must address. The first key strategic issue for Metcash is its food and grocery sales figures, which fell by 2.3% to 9.3 billion. This loss could start a heavy downward spiral for Metcash in its food and grocery industry. The buyback of 50 plus IGA stores and the opening of 51 new stores won't create more revenue. The second key issue for Metcash is to control the growth of the Australian liquor markets chain, its liquor chain. ALM reported a second consecutive strong gain with annual sales growth of 24.9%. The strong performance was driven by Metcash's expansion into the distribution of hotels. However, sales growth in ALM of 24.9% will struggle to be repeated. Metcash must find ways to now sustain this growth and market level and look for minor gains across the board. The third issue for Metcash is looking to find ways to beef up its hardware and automotive chains, as it's putting up honest gains of rough sales growth of around 12.6%. Its complete ownership of Mitre 10 can only push sales targets so far. Strategies must be put in place to help market share in each value chain of Metcash. So I'm now going to talk about the recommended strategies that we came up with to help Metcash compete in the Australian grocery market industry and value chains. The first strategy is expanding the value depot. The value depot is a part of Metcash's food and grocery industry and is a large wholesale supplier store which is developed as a modern day version of Campbell's Cash and Carry, a previous chain that the company ran. The value depot needs to be expanded greatly as its potential in the Australian grocery market goes beyond ABN holders and one store in Queensland. To compare it to another store, it is similar to Costco. However, it is an Australian-based store which is only strictly for ABN holders in Australia. This area of food and grocery keeps making leaps and bounds. As mentioned, the area's top performer, Costco, began making huge inroads into the Australian grocery industry by reporting a net profit of $9.73 million from last year and sales revenue of $603 million. This store now intends to continue to expand by making more stores around Australia and aim for over $1 billion of sales revenue in the next financial year. Metcash must capitalise on this growing trend by investing into the expansion of value depot stores around Australia to capitalise on the growing market share. By expanding stores around Australia and expanding beyond just ABN holders with the value depot's free membership-based system, market share can be taken from Costco, as Costco's membership system starts at $55 for businesses and $60 for families and singles. Also, this market is an emerging market. Market share has not been fully capitalised by anyone. Metcash must respond. The second strategy for Metcash is to develop a share of wallet so customers shop at many Metcash-owned businesses. This strategy, known as share of wallet, has widely adopted by Metcash's rivals such as Wesfarmers, who use this strategy strictly in regards to Coles Express stores at Shell service stations. A strategy similar to this needs to be applied for all Metcash-owned businesses. Something as simple as a 5% discount at one store if you spend X amount of dollars at another can help spread wealth and encourage customers who are already shopping at Metcash stores to shop at others. This helps all Metcash value chains benefit, and it helps increase competition as Metcash is bonding as one whole entire company across all value chains. The third strategy, further expansion of joint ventures in hotel acquisitions around Australia, is something that we believe the ALM chain needs to do very quickly. By moving into more hotels, it would allow Metcash to protect their current strong performance in the Australian liquor industry. June-July 2012, Metcash invested $41.6 million into new joint venture strategies into 3 Queensland hotels. Further acquisitions into this market can allow stronger distributions, stronger scaling and broader distribution of sales across multiple states of Australia. Thank you for listening to our presentation.